I think what we're likely to see is that as gold goes up, and we've now seen that it's broken out of sort of recent lethargy into really new high ground, which basically means the dollar is declining, then we're seeing this also being reflected in other metals, including silver. But it's silver's historic role as an alternative money to gold, which I think will drive the price considerably higher. So even if the recent rises, which have been spectacular as far as people who don't understand its credit going down, as far as, the people who don't understand that that's the case, this rise has been spectacular. I think silver will probably tend to hold up better than gold.
Gold continues to go from strength to strength, reaching a fresh record high this week at $2,426, showcasing strong market momentum despite signs of an increasingly overbought condition, indicated by relative strength indicators. Meanwhile, silver has experienced an impressive 18% gain year-to-date, marking a significant shift in a market that has traded sideways for the past 3 years. Analysts suggest that silver's rise is driven by investment and industrial demand, with parallels drawn to copper, another industrial metal, which has also seen upward momentum due to tight market conditions. The surge in industrial demand for silver is particularly notable, with China playing a pivotal role in driving this trend. Alasdair Macleod highlights China's long-standing focus on silver as an industrial metal, dating back to 1983, when the People's Bank of China established a dual mandate regarding gold and silver. Unlike gold, which traditionally holds a monetary role, silver is primarily viewed as a critical component in manufacturing photovoltaic cells and lithium batteries. India's recent surge in silver imports further underscores the growing demand for the metal, with February witnessing a staggering 260% increase compared to January. This surge in demand is driven by investment and robust industrial activity, particularly in emerging markets like India. Alasdair emphasizes the importance of understanding these underlying industrial dynamics, where notable companies like Reliance Industries actively participate in the silver market. He suggests that such industrial demand could potentially shift the control of silver prices away from China, signaling a significant shift in market dynamics. While silver's role as a monetary asset remains significant, its growing influence as an industrial metal is reshaping the dynamics of the silver market. As demand continues to surge, particularly from industrial sectors, Alasdair believes that understanding these trends will be crucial in navigating the future of the silver market. We will present clips from Alasdair Macleod's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
It is, I think, very interesting. Silver, the price has been controlled, I think, by China, because the People's Bank of China has really had, back in 1983, it's given a dual mandate on gold and also silver. With respect to silver, China uses it not as money, but it uses it as an industrial metal. China is the major manufacturer of photovoltaic cells. It's stepped up its production of lithium batteries, and generally the consumption of silver has been rocketing. The Indian government wanted to generate or support the photovoltaic cell business. I think this is partly, if you like, to offset the increasing amounts of carbon that the nation is generating. So the result is that some very large businesses in India have been building factories to produce these photovoltaic cells. And one in particular, Reliance Industries, was in the market, and I believe that was the company which was taking delivery on COMEX. With something like, 1,300 tons. And Reliance Industries, phase one of its production was due to start in March. I haven't actually heard whether it has, but I assume it has. And that is that's a 5 gigawatt photovoltaic manufacturing facility. They're looking to doing 20 gigawatts. Now, this is a very serious demand element for silver, which takes the control of the price away from China. And that's a very important point. We do know that when gold runs, silver tends to run twice as fast. If gold goes sideways, you've got the risk that the gold-silver ratio starts rising because, monetary interest disappears from silver. But the monetary interest is still sort of there in an underlying form, if you like. And I think what we're likely to see is that as gold goes up, and we've now seen that it's broken out of, sort of recent lethargy into really new high ground, which basically means the dollar is declining, then we're seeing this also being reflected in other metals, including silver. But it's silver's historic role as an alternative money to gold, which I think will drive the price considerably higher. And I note today, this is Monday the 15th, that looking at gold, it is up about less than 0.2%, and at the same time, silver is up 2.36%. So, this indicates a very tight market, and I would see that continuing. So even if the recent rises, which have been spectacular as far as people who don't understand its credit going down, as far as, the people who don't understand that that's the case, this rise has been spectacular. I think silver will probably tend to hold up better than gold because of these underlying industrial dynamics with the acceleration of demand from India, which has now become a major importer of silver, not because Indians are so much buying silver as ornaments and all the rest of it, or as a cheap alternative to gold, but I think it's that industrial demand which has really been driving it. And that's the new factor out of India.
The U.S. debt market is raising concerns about the country's escalating debt crisis, signaling a need for a debt detox to pave the way for a potential economic resurgence. As of March 2024, the U.S. public debt reached approximately $34.59 trillion, a significant increase from around $32.6 trillion in July. Alasdair also sees that the precarious state of America's debt is nearing a terminal point for the country and the dollar. He notes a strategic stance by policymakers to avoid being accused of deliberately undermining the dollar, opting instead to allow its decline to unfold naturally. This decline has accelerated, attributing the rise in gold and silver prices not to their strength but to the weakening of the dollar. Alasdair also points out the persistent inflation in America and predicts a rise in bond yields due to the government's debt burden. With banks adopting risk-averse strategies, credit becomes costlier, posing challenges for over-leveraged sectors like commercial real estate and private equity. Amid this volatility, Alasdair advises stackers to retain gold and silver, given China's strategic shift toward acquiring these metals over U.S. treasuries. Let's get back to the interview.
Debt situation in America is all but terminal for America, all but terminal for the dollar. What they don't want to be is accused of undermining the dollar unnecessarily. Their policy has been just to sit back and let the dollar destroy itself. This is now happening at an increasing pace. And this is why gold and silver have been rising. It's not that they have been rising, and as we've discussed before, it's actually the dollar declining. I think what we're seeing is an increase in the pace of decline of the dollar. It is clear also that the rate of inflation in America is not falling. It is clear that with the US government in a debt trap, that bond yields will rise. It's also clear that rising bond yields, rising interest rates, the attempt of banks to avoid risk means that the private sector is going to be deprived of very expensive credit. And when I say deprived of expensive credit, I don't mean they're going to be offered cheap credit. Far from it. The situation for over-leveraged businesses, we've seen this with the commercial real estate sector. Same with private equity, which works on leverage. There is going to be an absolute catastrophe in the private sector. And the banks, the commercial banks, want to avoid this. As to the very short term, they've shot up very, very rapidly. It rather suggests to me that there could well be bullion banks in trouble because they take the short position. Not only do they take the short position in the market on COMEX, and COMEX incidentally has grown as a proportion of the total world futures market or paper markets, because the OTC market in London, I was surprised to see in a presentation by Ruth Crowell, who's the head of the LBMA, that COMEX has probably caught up. It's probably as much as, I don't know, something like 60% of the LBMA's size, whereas in the past, the LBMA was 10 times the size. So this is interesting. So what we're looking at, when we see the numbers on COMEX, you can see there's a pretty naked short position amongst the swaps. And not only that, but in Europe in particular, banks offer unallocated gold accounts, and these are fractionally reserved. So that again is technically a short position in the bullion market. So I think that this rise in the gold price and also the silver price is putting an enormous pressure on the banking system. And for this reason, I think there was a coordinated knockdown on Friday when, after all, the buyers, or the supposed buyers in the Far East had shut up shop for the night. That was the time when you come in and you bang the market and you take out the stops and you get the price down. And that indeed happened really very, very dramatically. Whether it continues or not, we will see. I think that a decent correction is overdue, but these are strange times. So we have to see. I mean, all I can say is that trading this is extremely difficult. But from the point of view of what you might call stackers, the people who I would rather describe as trying to escape credit because they understand, they're better just sort of stay with it and use any dip to, get out of credit and get into gold. And that, after all, is what the People's Bank of China is doing. It is selling US treasuries to buy this stuff. And they know what they're doing. So that, I think, is a sort of quick roundup, if you like, of the geopolitics. And I think the consequences for the gold and silver price, which, really have been quite remarkable in recent weeks.
As the precious metal market continues to evolve, it's anticipated that once silver breaks through, its performance will surpass that of gold. This forecast is grounded in anticipating heightened investment demand for silver, which has previously lagged. With this anticipated surge in demand, silver prices are poised to gain significant momentum, potentially outpacing the trajectory of gold prices. Can silver's expected breakthrough propel its performance beyond gold in the market? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.